Stavros Tousios for M4Markets, December 12th. Today, we're going to have a quick look on euro dollar and the S&P. Similar signals on the RSI, and price action also resembles one another. I'm going to start with the 4 hours to show you these signals in both cases. On the EURUSD, you see repetitive peaks and repetitive lower peaks on the RSI. That suggests there is divergence. Each preceding signal here led to a pullback, as you can see, rather than anything else. And that pullback each and every time was a little bit smaller. That, guys, suggests that we'll have a wedge pattern here, okay? And wedges usually have 3 peaks. We have the first, we have the second, and maybe this one is not in yet. Maybe we're gonna do one more and then fall, okay? But either case, the signal is here. And even if we do go up, it's going to probably remain being here as well, okay? So it's very important that we keep an eye on, from down here, I would say all the way down here, we can look at the 50, of course, to see where things are changing. We'll have to pay attention, though, in the shorter term at the swings, okay? Usually because the wedge has this low and this low, okay? So we'll have to pay attention to 102.20 and then 103. It looks like that's the one. And of course, for any chance to get back here, it means that we have to get inside the previous swing, at least the territory over here, which is below 105. And we have actually already retested that level, which means that if we did indeed, remain above with a firm support, we could see one more move to the upside. Now we have kind of a double top here. Maybe it will become a triple top. Maybe we're going to do a false break and then continue lower down. Or maybe if we do break above and we'll come down and we retest that level, we flip it to support, then there is going to be a continuation to the upside. And that is going to be somewhat unexpected, I would say. So there is not many chances if we weigh the probabilities. What we can do, as you well know, I love channels and all that sort of things, that they are really showing us where the trend is heading. We are kind of consolidating here, okay? And if we lose this channel, guys, the road to 43 and then to the 29 is going to be, I wouldn't say widely, but definitely open, okay? On the S&P, very similar price action, but the S&P, of course, is not as, it hasn't done as good to the upside lately. The signals are popping here as well. You've got these two signals actually coming in at different times and with different formations. It kind of suggests that this is an actual strong signal, guys, because you've got a normal divergence and then a hidden divergence. And apart from that, if you look at the trend to the upside through the channel, we have broken outside the channel over here. Now this becomes a little bit, a little bit bearish, to be fair. Important levels, the 38, the 50, and the 61.8. So far, we have actually turned the 23 to a resistance, which becomes an important wall for bulls. It's not necessary we don't go back there, but what I've been thinking is that if we do go higher up, maybe we're going to get the right shoulder for potential head and shoulders pattern here, and from there fall lower down. At the same time, let's not forget that we have a very strong support level over here. We have already done 2 attempts to move lower, and they both came in with a bounce. Now this one, I don't see a bounce per se, okay? Last time we went and we did see something like this. So if we come back here, most likely we're going to break this time, unless if we stop right where we are and we go back up again for the right shoulder. So it's not really sure we're going to see the right shoulder, because there is higher chances now that we'll break lower down, with of course the 37 becoming a critical level, since it is the golden ratio, and we'll have to pay attention to the golden ratio, because losing the golden ratio usually leads to a reversal, and kind of the 79% of the retracement here around 36.20 is going to be like a make it or break it level, okay? So this is definitely looking a bit more bearish than euro dollar does, and it will be kind of validated once we lose the 39.10.